Thanks for joining us on the News at 1. Let's take a look at your market news now. Asian markets were slightly lower after a recent rally as investors cashed in. Markets also looking ahead to key central bank meetings that could provide some idea about monetary policy in the new year. Japan's Nikkei ended down 0.3% in Hong Kong, the Hang Seng slipping 0.6%, and the Shanghai Composite Index in China sank more than 1% by close. Let's go to Wall Street now. The main indexes closing higher on Monday, lifted by technology and energy sectors as oil prices rose. Investors also eagerly awaiting an expected U.S. Federal Reserve rate hike later in the week. The Dow Jones Industrial Average rose almost 0.25%. The S&P 500 gained 0.3%, and the Nasdaq Composite Index added 0.5%. Let's take a look at how other markets and commodities are doing now. Azile Qishe from Lehumo Capital joins me from our studio in the JSC for some analysis on the markets. Good afternoon. Thanks so much for your time on SABC News. Let's start with gold futures. They fell yesterday ahead of a scheduled U.S. Federal Reserve meeting. We also saw the gold prices going up slightly after that New York terror attack and then going downwards. What's happening there?
Okay, when it comes to those gold futures, what you look at when you look at gold, you always look at the safe haven appeal it has. So even though it was rightfully falling yesterday before those Fed meetings, when we saw that possible attack, and thank God it wasn't as bad as it could have been as the bomb didn't fully detonate, money moved to gold, but in the midst of all the confusion, the information started filtering out that nobody was killed, and actually the attacker was the one who was mostly hurt, and then we saw that money move out of gold then again, following the normal trend it was following on the day. So if that bomb had been worse, and would have possibly had investors thinking it would lead to other things, but thank God that didn't happen.
Let's stay in the United States. The US dollar not doing that well among its stronger peers. One of the reasons said to be for that is that the US jobs data affected that. How does that work as we saw more jobs than expected when those non-farm payroll numbers came out for November?
Okay, the jobs numbers were actually excellent. The job numbers were good across all demographics, and we saw that, and the expected reaction would have been that, okay, we will see then a rise in the dollar price there. But in the midst of that, what happened was the wage number hasn't increased. So now the main attention has moved, and the focus has shifted to wages, which have actually stayed steady at the same rate, at the same level, even though there are more jobs coming into the market. So now speculation over those wage numbers and the effects and consequences of that wage number staying the same is what's being discussed now, which has kind of overshadowed those excellent jobs numbers.
Let's come back to South Africa now. Dis-Chem's share price fell by about 9% this morning. The founders sold off about 32 million shares. Should shareholders be worried, especially in the context of EOH that we'll discuss a little bit later, as well as Steinhoff?
Okay, with the Dis-Chem issue, I don't see a reason why shareholders should be worried or should panic, at least at the very moment. What happened there, we did see a sale of 32 million shares, which belong to some senior executives and senior management staff at Dis-Chem, what they've termed as an accelerated book build. So they sold those 32 million shares, raising about $82 million at 35 Rand per share, which they've called an accelerated book build, which even though it's not ideal, it says there's nothing untoward about an accelerated book build. So they're raising funds there by actually selling those shares. So at this moment, without any more information coming through there and them actually terming it as an accelerated book build, I see no reason why shareholders should panic at this very moment, at the very least.
So earlier on and last week, we saw that EOH, the share price was dropping. There wasn't information coming out. I think yesterday we were told that one of the directors was selling off shares because of a forced margin call. What is this? And again, should shareholders or people watching be worried about EOH in that stock?
Okay, a margin call is something that comes into effect when you're dealing with derivative products or any finance product, actually, when it comes to investing and trading. So what happens is when you have a derivative that you're going into, you're actually leveraged with more funds than you actually have. Therefore, you can afford a lot more, but not trading the actual equity price. The equity itself. You're actually trading on the difference of price between your entry and your exit. So I know it sounds a bit complicated, but it's actually just a finance product that allows you to actually take part in the movement of a share. So if that share is then suspended or a huge drop bigger than expected actually takes place, you do get what is called a margin call, which means that now you have to finance, you'll be stuck in that trade and you have to finance that product. So usually if you're an individual, that must come out of your pocket. In this instance, we saw EOH, some forced share sales there to be able to raise those funds to actually finance and actually manage those derivative products. So it was a margin call in that effect, and then there was a forced share sale to be able to service that. So that's what happened there.
Okay, let's come to Steinhoff. Obviously, we've seen the stock losing a lot of value, billions wiped off in terms of both Christo Wiese's personal wealth as well as on the market. I think it was 18 billion. I'm not sure about the exact amount of dollars wiped off there. They've announced that, among other things, there'll be an appointment of an international advisory team. They're fully focused on safeguarding operational liquidity. Seems like they're doing damage control. Is this why we're seeing about a 40% recovery in the Steinhoff stock this morning?
Yes, certainly good news there. Some confidence building there when it comes to actually that body that will be put into place to actually look at that that liquidity. Also, while that was happening, there's some rumors and murmurs that have started. I have to be very clear there that it is rumors and murmurs at the moment. Nothing official has been said. That they will be looking to actually sell their shareholding in non-core assets, which was PSG and CAP at this very moment that they're speaking about. Some sources coming through there, including one from Frankfurt, but not confirming or saying anything officially yet from Steinhoff's side, but that obviously had been driving confidence again, and obviously a nice reaction seen to that on the market. They're looking to plug about, there's about $12 billion that was actually wiped out. They're looking to raise about $2 billion now to plug that balance sheet, and that's why these rumors are starting to make sense, that they're actually looking at selling their holding in PSG and CAP, which is seen as their non-core assets at this moment.
Lots of people, when the Steinhoff share started free-falling, saying now would be a great idea to buy those shares, and then a lot of brokers saying this is not a good idea. What's your thoughts? Personally, I feel it's not a good idea yet. Let's wait it out. Let's actually see what's going to happen with those results, because at the end of the day, all of this drama and all this noise is happening. The results have not been released yet. So what could happen from those results, if they are worse than previous and worse than actually expected, looking at everything that's going on now, we could see a lot more damage actually take place in that share. So for me right now, would be stay away from Steinhoff until the results issue has been resolved. Azile Qishe from Lehuma Capital, thanks so much for your time on SABC News.